bring in Surevest CEO Rob Luna. So, Rob, what are you modeling? What are you modeling for?
Yeah, I don't really play that game, Charles. I don't pick the S&P 500. I learned a long time ago I could do much better analyzing individual stocks. The S&P is trading at 22 times forward earnings. A lot of mediocrity in there. I would stay away from the S&P. Look at companies like Facebook and learn something, guys, out there called PEG ratio, price to earnings growth. Every dollar you pay for growth, much more profitable if you could buy companies that are growing faster than the S&P. Facebook trading at a 20% discount on that metric. I'd rather own companies like Facebook than trying to pick where the S&P is going.
Then real quick, Rob, let me ask you, because we're in the midst of earnings, and Kenny, you're going to jump back in here in a minute, but let me just follow up quickly. A lot of those names, right, with those great PEG ratios and its fantastic growth, they're posting numbers out of this world. Today we had Etsy, Roku, Yeti, even Uber, which, by the way, was down and came back. How do you handle that? These names, though, as great as they are, when they get slammed, and sometimes for no good reason, they get slammed big time. You ride that out?
Yeah, I mean, it depends on the company, Charles. I mean, look, you put up some names that I like: CrowdStrike, Zoom, Facebook, FarceFetch. These are tomorrow's leaders. These are going to be companies around 3 to 5 years from now, dominating, growing top line 25 to 30%. I don't get scared off. I have conviction. If those names pull back, I'm buying them. I'm not a big Yeti guy or Etsy. Those are kind of tertiary names.
Okay. Right. Hey, listen, I made a fortune on Etsy. I want to buy it on the dip. I got you. Hey, Rob, real quick, the jobs report tomorrow. How are you looking at that? And are you going to do anything today before that, like to hedge yourself, for instance, or are you just going to ride through that as well?
No, I mean, I'm not really day trading anymore, Charles. So, I'm not doing anything day to day. But what I'm going to tell you is if you looked at ADP number, I think the jobs report might be a little bit optimistic. I think we can miss there. But look, bad news is good news right now. We got the 10-year at a 1.2%. Everyone's looking forward to the end of the month at Jackson Hole. If interest rates stay low because the economy isn't growing that fast, that's why you're going to continue to see these big tech names grow. People are going to pay up for growth. Yeah. So if things sell off, use it as an opportunity. But bad news is good.
I agree. The ADP number, I think, is worrisome, and I don't think they do anything at Jackson Hole. I just don't think they'll have enough data. Even if we get 1 million print tomorrow, I still don't think that'll be enough. Kenny, Rob, always appreciate it. Thank you both. And by the way, we learned so much from both of you.